G'day guys, welcome to the channel. My name's Tim, and on today's episode we're taking a look at Bitcoin, and I'm going to make the case why this bull run is not unique and how it appears to be following the exact same pattern that it followed in 2017 and 2013. And if it continues to follow this pattern, it may tell us what happens next for Bitcoin. Okay, so if you like this content, please subscribe and like the channel. It really helps me out. Now let's get stuck in. All right, so what I've got on the screen here is 2013, 2017, and 2021. And I want to pinpoint a few aspects that are really similar in all three bull runs. So the first thing I want to show you is that this blue shaded area is the 50-week moving average. Now, in other videos, I've been focusing on the 50-day moving average, but this is the 50-week. So it's essentially a year's worth of averages, okay? Now let's have a look at what Bitcoin has done. So in 2013, look at this big gap. We go away from the moving average and then we crash back into it. 2017, we crash back into it, and 2021, we crash back into it. Now, a lot of people were looking for the blow-off top, and you can see that in 2013, it was a lot steeper, but then we had this big open space and crash. 2021, we went down a little bit, went up, and then crash. And then, 2017, and then in 2021, we went up, went down a little bit, and then big crash, okay? That's the first thing. Now, when we did come down and crash, you'll notice a big red wick right here. Then we had another one here, and we had another one here. And none of those wicks ended up touching the 50-week moving average. From that point, we went up, and we had a green and red candle around here. Now look at this. In 2017, we had a big green and red candle that basically cancelled each other out. And in 2021, we did exactly the same thing. And then from that point, in 2013, we went down and we bounced off the 50-week moving average. 2017, we went down and we bounced off the 50-week moving average. In 2021, went down and we bounced off the 50-week moving average. We then worked our way up, up, and up, and that's as far as we can go in 2021 for the moment. But in 2013, from that point, we turned around and then went below the 50-week moving average for the first time, and that really showed us that we were, in a bear market. 2017, similar thing again. We stayed under the 50-week moving average until we bottomed here and here. Now, what happens next? Do we go up, like a lot of people are thinking, and get all-time highs and get rich by the end of December and become millionaires? Or do we go below the 50-week moving average like we've done in the last two bull runs? Now, these are only two data points, but you'll see that it's followed this exact same pattern by bouncing off the 50-week, coming up, and then crashing through it. So it's done that twice. Now let's have a look down below at the stock RSI to see how they compare in all three bull runs. So you can see here in 2013, again, because it was such a steep incline, you can see that the stock RSI was overbought here at the top, and then we worked our way down here, and you can see it kind of correlates to this big red candle, okay? Now, in 2017, we did have this part, as I said before, where we went up and then we went down before going up again. And you can see that the RSI for this red candle did go down, and then we go up for the top, and then we crash back down to the bottom, just like we did here too. We crash down to the bottom. Now, in 2021, this is interesting. So the RSI was at its highest, the stock RSI, during this period here, even before we got anywhere near the real top peaks. But you can see here we did go down, and that does correlate with this going down. Then we worked our way up, and the RSI only went up a little bit. Okay, so this is probably a sign of weakness, this bearish divergence that, if we were paying attention, and it's obviously easier in hindsight, but this was a sign that maybe, even though the price is going up, and we've got some big red candles up here as well, this being a weekly chart, there was a sign here that, there was some weakness appearing, and then, it went down and it stayed down. So after we've got to this sort of peak section, you can see that the RSI stays at the bottom here, okay? Until it turns around and we get some bullish momentum. Now, if you didn't look at the price chart and you just looked at the RSI, where would you have expected the price to go? You'd expect the price to be an all-time highs again. But what happened is the price went up, it hit its head, and then went back down again. Okay, so there was bullish momentum. And this is what confuses the market. The indicators, the market sentiment tells people that we're bullish, but the pendulum swings too far and people think that that bullish momentum means that we're going to all-time highs. It just means there's a temporary bullish momentum while we're going up, and then we turn around and we crash back down under the 50-week moving average. Now, we did that same exact thing at this same exact point in 2017. We had the bullish cross and we get some bullish momentum. This time it didn't go up quite as high, but look at this. And then it turns around and then crashes back down again, okay? And check this out. In 2021, what's happened again? We've had the bullish cross. We've got the bullish momentum. And right now, you're hearing so many reports of people thinking that we're going to all-time highs. Now, I can't tell the future. Nothing is impossible. It's possible that we go to all-time highs from here. But the fact that we are following the exact same pattern that played out in 2017 and 2013, we've got the bullish momentum here. If we follow the same pattern, most likely what will happen is it will turn around and we will crash through the 50-week moving average, and that will give further confirmation that we are following the same pattern and falling deeper into a bear market. Okay, so that's what the data is showing so far. Now you can see we've already had a red candle. So again, there's no guarantees at this stage that we follow it and do exactly what it's done in the past, but the likelihood of us following that same pattern when we've followed everything else to a T is very high. Okay, so anyway, that's the end of the video. I hope you enjoyed that analysis comparing 2013, 2017, and 2021. What happens next? We don't know, but odds are, and you want to play with the odds in your favor, odds are we go below the 50-week moving average, and that will confirm that we're following the same bearish pattern that we've followed in the previous two bull runs. So I hope you enjoyed the content, and until next time, my name's Tim, and cheers.